my son says to me, I got three boys and a fourth coming here in a couple of weeks. And
All
and
right.
one of my boys says, well, how much are you selling the book for, Dad? And I said, well, right now we've got it, it's 99 cents. And he said, you're a terrible businessman. He said, yeah, 99 cents. How much did it cost you to make this? And he's just laughing at me, right? So the
Yeah.
kids got a good kick out of it anyway.
Yeah,
So
nice.
it makes
It
for a
is.
good paperweight, but I think it's helped a lot of people.
If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randal. Let's dive in.
Okay, welcome back. I have Travis King on today, and I love this conversation because we're talking about land, subdividing land, writing notes on land. If you've been following along with me, you know that we have launched our crowdfund and we're doing single family fix and flip with note sales on the back end where we're actually seller financing those houses. Travis is doing that with land, and I've always seen this as a thing. I've done it. One of the first deals that I ever did was I bought a property, and then across the street, the same owner sold me her land. She had a single family lot. She sold it to me for $1,000. I found a buyer for $3,000 that I owner financed it to. I took $1,000 down payment from him, paid the seller, and I own this lot free and clear. And now I had a $2,000 income generating piece of dirt, right? Love that. Travis does that at scale. His last name's King. I call him King and Dirt. It is awesome talking to him, seeing the infrastructure that he's built. He's got a CRM that he has just for land investors. So we go over and we talk about some of the strategies that he employs, how he's doing it. He wrote a book on this, and if you listen through to the end, he can tell you how to actually get that for free. So love the conversation. Again, I appreciate him jumping on and sharing his information with us. If you're getting value out of the show, please go on, rate and review. Helps us a ton. And let's jump in. Let's talk to Travis. Here we go. Travis, welcome to the show. Travis King, the king of land. Let's talk about land today, man. I'm excited.
I'm excited too. Thanks for having me.
For sure. All right. So let's start with a little bit of your background. We were just talking offline just now, like you got into land flipping because of Bigger Pockets podcasts, listen to podcasts and that sort of thing. So pre-land, what got you into it? How'd you even get into real estate? Were you flipping houses, doing something else, or you had a corporate gig? What's the story?
Well, ironically, so I'm from Montana. I grew up in pretty rural Montana, and so it's funny to end up in land because my dad and my aunt since the 80s have been buying land and subdividing it and seller financing it, right?
Yeah.
So like it was always right there, kind of hidden in plain sight. But I wasn't that interested, having walked a lot of land and marked off a lot of corners with rocks and coffee cans, and land did not excite me, right? So I was going after houses, and so early 20s, that's what I got into. It was single family houses, and the whole plan was kind of buy one every 2 years, long-term plan.
Mm-hmm.
And then I started in the 2004-ish, right? So a couple years went good, and then we all know 2008, right? Probably similar story to a lot of folks. So got into real estate. It's been, I guess, 20 years, now. But at first, it was a focus on single family. Felt like in my 20s, I had some really strong traction early, and then the 08, recession happened, and it just wouldn't say it just like set me back. It also like deflated me, took the kind of the wind out of the sails for looking ahead, like with that awareness of what could happen, And at the time also being young and ambitious, but not that wise, right? I wasn't amazing at analyzing or underwriting. I just had, a lot of ambition and action.
Yeah.
Right. So some of my buys weren't that great. So it kind of got exposed, I guess you'd say, right, with the 08 recession. What I was doing got exposed, and my lack of knowledge got exposed. So it took me a minute to kind of regroup. And when I did, I was exploring other asset classes and trying to look for stuff with maybe lower barriers to entry, less risk, and then also something that when I kind of put pen to paper and said, hey, buy a house every 2 years, it's fantastic in 20 years. I've got 10 houses. The challenge was I had to have a W-2 for 20 years to get those 10 houses. And that was not a trade-off I was comfortable with, right? That wasn't in alignment. So I'm kind of like, okay, I've got to go a different route. And so I think like a lot of people kind of, searching for an asset class or a niche or a strategy, I was a avid follower of Bigger Pockets, and one day on my commute to work, I was listening to a podcast, and this guy came on and was talking about how he flips land as a business model. And I was like I say, I was really well aware of land. I had actually done a subdivide at 19 years old, so like I knew land,
Yeah.
but like not as a business model. I knew it as kind of a longer term play, right? A long term investment. And I think that's how most people think of dirt. But this guy kind of presented it as like a machine, like building like a flipping machine, right? In a high volume, kind of make what you do on a lot of, small fix and flips, and that piqued my interest. And then from there, it just kind of became, diving in and consuming every bit of education and course and content out there, and taking action. And then after we kind of got things figured out, we kind of just looked at, how can we scale this, right?
Yeah.
But at first, yeah, it was that awareness, right? Like anything, somebody's listening to your podcast today. At first, we're presented like we become aware of it, and then we start to investigate and research, poke holes in the idea. You know what I mean? Poke holes in it. And for me, it was something that I felt like I started with really cheap lots and buying these lots off of auction sites. I'm buying $500 lots and selling them for 2,500 or 5,000, right? So like really low risk, really low barrier to entry is kind of how I started. Got my proof of concept, and then from there, that was about 10 or 11 years ago.
Yeah. I was going to ask.
Obviously, yeah, we've evolved a lot, since then, and it's a whole different business model now. And fortunately, I was able to, go full time and leave my job, several years ago from land flipping. But yeah, that's kind of how I got to start was, driving to the W-2, listening to podcasts like a
Yeah.
lot of people.
I mean, that you're an early adopter than a podcast. That's back in like Bigger Pockets was podcast. Like I remember going to one of their first meetups, and it was in Denver in 2012 or something, 2009 maybe. Maybe it was that early. So yeah, you're an early adopter on the podcast front for sure. Then
that was 2013. Yeah. And at the
Yeah.
time, the neat thing is, yeah, some of the podcasts I listened to, you're right. Like that was early in the podcast game. And like one of the guys, John Lee Dumas, that I used to, Entrepreneurs on Fire, I used to listen to. One of the guys, it was kind of neat because come full circle, a couple of years ago, I was able to be interviewed on his show.
Nice.
And I remember listening to him. He was like one of the first, 7-day-a-week shows, right? So if you're a podcast binger, having a show, the number of shows that are put out, you're always waiting for your next one.
Yeah.
Right. So yeah, early adopter, love podcasts. Felt like there was more long-term value in listening to podcasts than, talk radio or music or something silly, right, on your drive it's kind of repetitive. So learned a lot from podcasts, and have earned a lot from from being a podcast listener.
For sure. So all right, let's talk then about the strategy. Find out about land, and you're like, okay, this is the thing, I'm gonna go all in. And that was around 2013, you said, when you first heard about it, or was it? Yeah,
about 2013. And then probably like, and of course, at the time, the other part of Bigger Podcasts is, at the time, it's changed a lot. Bigger Pockets, it's changed a lot. But back then, they used to be very like anti-course and anti-educator, and it was kind of like, hey, we're a forum, like it's like let's all learn from each other. Well, that's a slow process, like filled with a lot of biases and opinions that you might not know how to filter early on, right? So for me, I took a long time kind of trying to learn things off YouTube and forums. And then ultimately, when I started, buying some courses, it's like, bang, everything was curated in one package.
Yeah, for sure.
So for me, that was kind of like the education was like almost like 9 months of YouTube University and forums and stuff to kind of feel like, okay, I'm ready to go. But then once we went, we just snowballed a lot of small deals, a lot of small bets, small risk, until we kind of snowballed up our income. And then I started to recognize like, that we either needed to add team to continue to do this many transactions or more transactions a year, or we kind of needed to add a zero to the transactions we were doing and do the same number of deals but bigger deals, right? Or bigger deals, less transactions. So that's kind of as we evolved, we had more capital, we had more resources, we felt comfortable doing bigger deals, so we inched into bigger deals. And that led to like agents, right? A lot of stuff before, we were selling ourselves. We're buying outright, closing ourselves, selling ourselves, note servicing everything ourselves. And then when we moved into bigger deals, it came from the pain of Randall, I had my wife and I, she works the business with me, and we had over 100, we created or generated over 100 notes. I think we're at like 109 or something, self-serviced seller finance notes,
Yeah.
right? And it was terrible. Like, we owned a note servicing company, not a land flipping company, and
Yeah.
we hated it. Chasing borrowers, buyers, and the cheaper the properties, the lower down payments, the more delinquencies you had.
Yeah.
And so we kind of like decided to reinvent our business model. And that's where we decided like, okay, we got to, we want to pay for title on both sides of the transaction, which, home buyers and realtors, agents that's the norm.
Yeah.
But kind of for the land flipping communities and courses, it's kind of all this like, hey, let's play in a sandbox that agents don't want to list in. So that's really how the opportunity is presented by most educators when I got into land anyway 10 years ago was, hey, agents don't want to list anything that's with the value of under 30,000 because there's not enough commission. So we have this huge opportunity of all this rural vacant land that agents won't list, but there's not enough margin in it. So we kind of have to self-close it on both sides, right?
Yeah.
We have to self-list it because we can't use an agent. So being about 2-3 years into the business, we realized like, man, this is going to be a long, painful journey if we stick with this business model. So I said, okay, if we've got to budget in a closing on the bookends on each side of the transaction to buy it, to flip it, we want to build in an agent commission. So we don't have to talk to these Craigslist and Facebook, buyer leads, right?
It's the best.
Oh, it's the worst. I'd rather have a root canal than talk to another, like, is this still available? On Craigslist, terrible. But having felt that pain, so we kind of, once I did that math on paying the agent commission, paying title on each side of the transaction, maybe paying for a survey or some due diligence, I realized like, hey, I need to be north of that $30,000-$40,000 mark, right? It just put me there to kind of do the backwards math. And then when we moved in to start working with agents, this was not just an epiphany. This was, a milestone. This was massive, because as I encountered specialized land agents that understood land, they helped me with valuations. I was starting to list properties way higher than I previously was on the land flipping, like for sale by owner platforms. Because MLS buyers, they're just used to paying a little higher rate. And I was also selling properties with like 10% down because that's what I had learned, like in these courses, right?
Yeah.
But when I get on the MLS, it's like the agents are like, oh, like, how are you going to pay me commission if you're only taking 10% down, right? Like you're going to be upside down. And then you bought the property. So I kind of learned on the MLS, it was, 30 to 50% down payment on land, not house, right? But on land.
Yeah.
It's just par for the course. So for me, all of a sudden I go, oh my goodness, as soon as we start getting 30 to 50% down payment, we almost have no delinquencies on our seller financed properties, right? So when people are putting 30 to 50% down, they just don't walk away. And you also get a lot of your money back from what you bought the properties for. So yeah, bringing agents into the business model was huge for us. And it also, like when we started doing these deals, we started making, $2,000 or $25,000 a deal instead of we started making 20,000 or 25,000 a deal instead of 2,000 or 5,000, right? So that was a big epiphany and milestone, in reinventing the business about year 2.5 or 3 years in.
Yeah. Let's go back then. Let's break it down a little bit just so the people understand what you're doing, because buying land, like you and I could talk about this and I understand what you're driving at. You're buying and you're creating notes and doing all this stuff. So go back and break it down. Like, is your main strategy purchase land, subdivide, sell off smaller parcels on owner finance, or is it some version of that? What are the avenues that you explore?
Yeah. So I started out with a complete focus on rural vacant land. Okay. And one, because of the price point of it, and two, that was initially my strategy was 100% seller financing, because I wanted to build up enough. I'm not going to call it passive income because you got to chase some people, but recurring revenue, right? Note income. I wanted to create enough note income that it replaced my salary. So at first, that was the goal. What we do is kind of to compress it or simplify it is everybody's taxed, whether you have a house or land, everybody's generally taxed at the county level. So there's an assessor, right? So we're essentially taking the assessor's tax roll of vacant land, hey, give me everybody, that owns land that there's not a structure or house on. And then we're doing some outbound marketing because we're going after off-market landowners. Much like if there was a savvy agent, right? Maybe that's how they would find listings. You could do the same thing, right? Reach out and say, hey, list your land with me, right? So we're going after these off-market landowners, and then when they respond, we're generally targeting people that have a long length of ownership. So that's kind of the common, pattern is that they bought it with an intention to do something, build a home, build a cabin, do something, and it's just underutilized, underused, plans change, right? So that's kind of who we're going after, is the don't wanters of the rural vacant land after we pull that data set from the assessor tax roll. And then we just do outbound marketing, right? That could be direct mail to start, was a big piece of it. There's, it could be cold calling, text messaging, ringless. Pick your channel, right? We have our list of off-market landowners, and then we reach out to them to see if they're interested in selling their land. We started focusing on rural vacant land because it was more affordable and it sells really well on payments. But as the business grew and we had more capital and more resources, we're able to kind of go into these metro markets and target more like urban infill lots, waterfront lots, more like things that would the end buyers building a home on it, within a year or two. So we added residential, lots to our like large acreage rural vacant land product type as soon as we had the resources that we could.
Do you still run both concurrently?
Yeah,
okay.
I do, absolutely. And it was more out of like being diversified years ago. I just thought it seemed wise to do, but I really didn't know how wise until interest rates changed, about, I don't know, a year and a half, let's say 2 years now, right, ago, when interest rates went up. We were riding that high wave like everybody else, of selling a lot of infill lots, like in Florida, Texas, like, because everybody was building with, constructing and, homes. But interest rates had a massive impact on obviously the spec home builders, right? So when they pumped their brakes, that product line, right, of kind of selling these infill lots slowed down. So we're really happy to still have that. That wasn't our only model, because that's some people's only model, is like source infill lots to builders, right?
Yeah.
Well, that dried up.
Yeah.
So for us to be able to, through the last couple of years of high rates, large acreage, recreational and residential land has continued to perform really well.
Yeah.
The other piece of it, Randall, is from, I've heard you talk about, 15-year mortgages, 30-year mortgages and stuff. Like, when we're not the borrower, when we're the lender, right? And when we're the lender, high interest rates are a good thing. Okay. So instead of people beating us up for a low interest rate, we're now, we're originating some of the best notes we ever had in the last 2 years. You know what I mean? I'm talking like 10.9%, 11% plus, because the banks have raised their rates on, and this is land, this is normal for banks anyway, for land, they're pretty high. A lot of banks want 40, 50% down, and they generally have like a 11 to 14% interest rate.
Yeah.
So when we come in at like 10.9 and less than 50% down, we're beating the bank, right? We're beating the bank with our terms, but like on a 15-year note, the interest paid on 10.9% interest is beautiful, right?
Yeah.
So
that's what I was going to ask
so
you, how you're structuring those notes. Let me ask you this then. Okay, so let's take a rural piece of land. One, on the strategy, right? Okay, so you're marketing. Two, say you pull a list from the county.
Yep.
Are you limiting how? And I know you bought in over 29 states, so this is going to obviously vary.
So we co-own a capital or funding company where I partner with land investors, land flippers, and students. And that's where like we're in 29 states.
Got it. Okay.
I personally invest in like about 3 to 4 myself.
Got it.
So that was kind of the beauty of when we started like funding and partnering, is I gained that exposure and I was able to learn all these new markets that I never would have been in on my own, because, there's just no need to be in beyond a couple states yourself, right?
So then let's take the ones that you're in. When you are marketing, are you limiting that search or that the parameters of the return data to frontage on streets to, because like in certain counties that I've looked at, you cannot, some you can. And so what are the other parameters that you look for when you're looking for land? And then once we have that, I'm going to dive into something else, but.
Okay. Yeah. So what I look at, it depends with the exit strategy, the intent. So we can build specialized lists, and that's something like we'll talk, I'm sure, later about the book. But one of the plays I created was we sent out these countywide campaigns, and then we ended up with a couple like waterfront lots. It just happened to be on the list. We didn't target them. And we did really well, right, on them in low days on market, tons of leads, sold quick, top dollar. And then I go, wow, like maybe I should start building lists, countywide of just waterfront vacant lots.
Yeah.
And you know what I mean? And so that we could intentionally replicate these deals. So there's ways to build very specific specialized lists, much like people would go after like probate or tax delinquent, right? You can do that, but yeah. So we like to subdivide. That's one of our biggest plays in the playbook is doing what I call minor land subdivisions, which means just we're not putting in jogging trails, we're not putting in roads, infrastructure, like we're just splitting the parcel, the dirt.
On paper, right?
And a minor land subdivide is usually you can take one parcel and create it into 4 or 5 children parcels. So that's a play we run all the time, Randall. So when we do that, like you're saying, maybe we pull that whole list countywide and we say, hey, I don't want to look at anything. I'm going to eliminate everything under 10 acres or under 5 acres because I can't split it into, 5, right? So I'd get rid of all those acreages, and that removes a lot of properties. And then I might, like you're saying, I have this list now. I can now pay a virtual assistant to go through and check road access on everything and note which ones have, 2 roads or 2 boundaries, a lot of road frontage, because then now we have more options for how we subdivide, right? The more road frontage we have. So yeah, we can run very specific lists if we're going after subdivide campaigns or waterfront properties, or we can kind of just pull at the county level and target a value range that we want to operate in and see what comes back, right?
Yeah. Okay. So knowing that, right? So let's take a rural subdivide that you're looking at and doing. So current strategy, you go say, what's the maximum acreage you'll buy? Is it all driven by price? Like you'll buy anything as long as it makes sense?
It's all driven by price. So like to break how things are subdivided down, the largest like that we would work in or that most land people would work in is like a square mile is called a section, 640 acres. And they take a section and they usually break a section up from 640 into 40-acre parcels. And it's generally halved all the way down, like 40s become 20s, 20s becomes 10s, 10 become 5 acres. And we go all the way down, we know, to like a quarter-acre lot, right? That's generally what we're doing when we're subdividing. We take that parent parcel and we say, okay, how can we carve this up in such a way that we're not creating 5 of the same thing and we've got a whole bunch of inventory and we're competing against ourselves, but we kind of right size them so that we might split it down the middle and sell off the large piece and then size the others accordingly so we have a little bit of variety in our inventory. And that's where we work with an agent. Like when I'm talking to an agent, I'd say like, hey, I've got this 15-acre property, here, take a look at it. Here's the road access. Like, what's the market like? Like, what would move? Should I do like a 5 acre, some 2.5, some 1 1/4? You know what I mean? Or should I do like, 4 1 acres and then 1 large, 10 or 11 acre? So we work with specialized land agents and lean on them to tell us, what the market will absorb. Right. And also, so we can get at a price point where there's a buyer pool.
All right. So any tips on finding a specialized land agent in your area?
Yeah, absolutely. So when we're on any of the platforms, Redfin, Zillow, anything, so we grab our immediate area. It could be zip code or, or within, 2-3 miles of the subject property you're looking at. I like to go to sold, not for sale, right? A lot of agents are good at getting listings and then they don't know how to get them sold. So I like to look at sold listings. And then when I'm looking for land, it's a different animal. It's a different asset class. So and it's all in good fun, but we know immediately when we start talking to an agent on the phone if they know anything about land, or we call them house jockeys, the ones that don't know anything about land, right?
Yeah.
You get on the phone and you go like, hey, has this had a perk test, or like, what's the zoning? What's the slope? Like, is it currently being farmed if it's like a large acre, and we immediately know if they somehow the listing fell in their lap and it's just land, right?
Yeah.
So when we look for sold listings, we want to see we don't want to see a whole bunch of houses and 1 or 2 parcels of land. We want to see that they're familiar with land. Land's a big part of what they do, right? And sometimes the cowboy hat's the big giveaway, right? In the covered photo of the agent. But a lot of times, more in metro areas, you'll have people that in that brokerage, there's like 1 land person, right? And everybody else focus on houses. So we really try to find those agents that understand land, and we reach out to them, for opinion of values, CMAs, as we're evaluating a deal, and let them know what we're doing. And we also let them know like, hey, we might have several opinion of value requests, and we don't close the deal because we're trying to buy for way under market value, right? And capture a lot of equity.
Yeah.
So here's what I do. This is Randal. This is a tip that's a completely untapped lead gen source. Okay. A lot of agents, when they get an email from like an investor, and you go, hey, can I get an opinion of value on this piece of vacant land? I'm a land investor, and they reply back, do you own it? And you go, no, not yet, but I'm buying it. And the agent says, well, I can't work with you, or, well, I'll charge you this for an OPV. What they don't understand is we might have 10 plus or even more OPVs for every one we actually get and list with them. Now, the problem is there's this huge byproduct of people that, yes, they want to sell, but they don't want to sell to Travis, the investor, for 50% of the retail value, but they want to list it. They actually want to sell the property. So I've just identified these potential listings. So if you're cooperative and we work together, I just say to you, hey, Randal, why don't the 9 out of every 10 people, or realistically, the 25, right, out of 26 that say no because they don't like my lowball investor price, why don't I just spoon feed you those leads and you see if they're interested in listing it for your price? And then the ones I buy, you list for me.
Yeah.
And in return, you're cooperative in providing me CMAs or opinion of values, right? So that's something that a lot of investors, they just look at it as a dead lead and they don't offer that to the seller. Whereas like we'll say, hey, I'm sorry we couldn't make it work. Understandably, like I'm an investor, I've got to insulate myself from risk. I can't pay top dollar, but through you reaching out to me, I know you're motivated to sell, or you have some interest in selling. If you reached out to me, I've got a great agent, Randal, in this market. Like, can I introduce you to this agent and perhaps get you top dollar, right? That way, this wasn't a waste of time for both of us. Like I solve your problem and you get top dollar.
Mm-hmm.
And then I do an email intro, and it just becomes this incredible win-win relationship of me handing you all my byproduct of things I can't buy. And then I'm also bringing you the listing on the ones I get.
Yeah. Huge value add for both your potential customer and for any agent you want to work with. Or
yeah, it really is the triple win, right? Because they wanted to sell the property. There's some motivation there, but understandably, like I say, the numbers game, 25 out of 26 or whatever, right?
Yep.
Might not want to sell to me for 50% of market value, but they have some interest in selling.
Yeah.
So what do we do with all those people that weren't actively going to reach out to an agent and say, hey, will you list it? But we've identified them through our marketing efforts, right? And they're receptive and primed to list.
I have to admit, like back in the day, because I'm an agent as well, we always have this struggle because all the direct mail we were doing, we'd have sellers invariably not want our offer price, just like you just described. Buying it deep, trying to get it in deep, and then I would have these leads. The struggle was teaching my acquisitions team how to convert that into a listing. It's like, hey, we'll give you 50 grand, but we'll list it for 100. It's like, that was such a hard, and we never really put it together to just refer that out and take a part of commission and just give that lead to someone else local to the market. That's like very low
Most
hanging
don't.
fruit that I just missed out on.
Oh,
So,
absolutely. And that's in probably more like 2025, but this next year, that's a bridge I want to build and connect because I
yeah,
have like a huge, my wife and I have a huge community of land investors, right? And we have so many, no's or no, not at that price
yeah.
that could be listings, right? So it's definitely
So low
something
hanging. So it's like,
that's not
it's right
being
there.
left.
Yeah. Great
Yeah.
idea. Let me ask you about this. Okay. So let's go back to rural land, like structuring notes. And I want to get into some of this other stuff in a second, but, when you are subdividing off, if you bought a whole section, are you going that big? Are you going buying 640 or are you
No,
buying?
almost everything we do is under 100 acres. We're doing
Got
like
it.
an 85 acre right now up in Montana.
Okay.
That most of that is a lot of like some of my clients, and you get in states like Texas, right, where you've got these massive
Yeah.
sections, 640 acres. Most of what we do, that section's been cut down,
Got it.
and into 4 or 8 at some point, and we're working within that. So most of what we personally do is under 100 acres.
Got it. Okay. That's what I was driving at. So is your play to acquire it, and just let's use round numbers here, simple math. Maybe you're paying 5,000 an acre and you want to sell it for 10. Is there some metric that you're looking at just again, for high level, if somebody's looking to do this? Every market's
Yeah,
going to be different, but I know in Texas, I'm in San Antonio and around the
yeah.
counties, like I can buy some things for 3 to 6 an acre and I can sell it for, double that. And so on a note, when you look at your returns on those notes that you're creating for the actual dollars invested, I mean, it's a crazy return.
Oh, it's so yeah. I'll introduce you to like what I call my triple play, right? So
Let's do it.
when we evaluate counties, I'll stack counties side by side,
Yep.
and we look at what I would call like my prospective acreage range of like the parent parcel, the one we're going after to subdivide, right? And let's say we're looking at like 40-acre parcels. Okay. I would go across, adjoining counties or 3, 4 counties nearby each other. And I'd say, okay, what does a 40-acre go for price per acre?
Yep.
And I would throw that in my spreadsheet, my Google sheet, and then I would go through and I'd say, okay, like let's identify the child parcels if we're splitting this up. Okay, what does a 20-acre go for? Half of that, okay, across each county. And then we plug that value in. What we start to see on some counties is like we almost double the value price per acre as we half size the property.
Yep.
Others we don't. The interesting thing is like when we kind of look at on a map of the Midwest, right? Like a lot of times you're just splitting farmland. Like there's no value add or forced appreciation to subdivide, meaning the price per acre is almost identical, whether it's a 40-acre, a 20, or a 10.
Yeah.
You're not adding any value. So in that case, that becomes revealed, on the spreadsheet there where you go, okay, well, I'm just splitting parcels to split parcels, right? There's no value add. So
Yeah.
we look for kind of that waterfall effect where as we half size it down, we continue to see like value added or forced appreciation. And that's where we could evaluate looking at, 3, 4 counties side by side and go, yeah, there's some over here, but we're doubling over here. Like,
Yeah.
that allows us, if I'm talking to a seller, and most land flippers, the play is, hey, I just want to flip this property. Kind of I would say kind of a threshold a lot of land flippers go after is, and this is hard for people who have no exposure or experience to it because it sounds crazy to even like, most people are skeptical that you can buy land for 50% of its value. But honestly, that's the cutoff for most investors is 50%.
Yeah.
Because they want to capture all that equity. 2, a lot of investors, if they're not well capitalized enough themselves, they're bringing the deal to a capital partner, right? And then they're going to split profits, right? And the capital partner to underwrite it, because it's land, not a house. Just like if a house, they might say, hey, don't go over 70% of ARV, right?
Yeah.
Same thing with land. They'd go, don't go over 50%. So if you start to offer over 50%, you're going to have to self-fund it.
Yeah.
You won't have the capital partners to work with you. So you have a lot of land investors that are doing the same marketing as I'm doing, but they're going to stop at 50% because they don't have the resources or the capital partner. But when I look at that and I go, wow, if we subdivide it, we double its value like immediately. And when I say subdivide, like these surveys, like the environmental assessment, a survey and recording the survey, we're talking like 12 to 18, 12 to $20,000 to subdivide. It's not like when people hear subdivide, everybody pictures, gated communities and stuff. Like I'm not talking subdivision, just splitting parcels, right?
Yeah.
So it's really cheap. So there's situations where you can spend 12,000 on a subdivide and it might add 120,000
Yeah.
in value to the
Incredible.
property.
Yeah.
Yeah, so that's what we do. So we really like to, so that allows me though to come in and say, hey, Mr. Seller, like, or of course, we're never speaking percentages with them. Like, hey, I'll give you 50% of your value. We're sharing numbers, but it allows me to raise my offer to maybe 70 or 80%.
Yeah.
Because
Yeah.
I'm going to double the value when I do a subdivide, and I'm still in fantastic shape after that. So
Yeah.
I can offer more than others that the strategy is just to flip. If
I
we're
love that.
subdividing. So the triple play, to finish out, the triple play is we capture equity on the buy side, we subdivide and we add value. Usually we force 100% appreciation is what we go after, that or more, and then we sell on payments at like 10% plus interest. So we capture equity, we add value, force appreciation, and then we get that interest income and we create 5 to 15-year notes.
Okay.
So if run the math on that, right? It's absolutely incredible
All right.
return.
So then, yeah, you answered that. That is, I like the triple play. It's very good. There's the multiple ways that you're making money. Are you targeting, and I bet this is a deal by deal case, but are you targeting, if you say take 40 and you divide it up, are you trying to recapture your equity, your capital outlay by selling off for cash, actual cash, like half of it, and then making free and clear notes on the other?
Exactly. That's exactly what I like to do. So ideally, if I could split it down the middle or close, the largest child parcel, if I could sell that cash, even if I, have a really good list price, an aggressive list price, just to get my money back or close, right? Because between that one cash and then the down payment on the others, I'm flush, right?
You're made
as
whole.
soon as possible. So yeah, it's a hybrid. Early on, when I was learning and we didn't know, like my wife and I, like we tried to push because I just wanted to build up all this recurring revenue, right? This note income. We sold 100% on payments, but we were buying at like 30, 40% of market value on this rural vacant land. And then we were selling with like 10 or 20% down. And then you end up upside down. And that's where we were like a couple of years in without having that knowledge or business acumen, like we just ended up in the situation where like, hey, we've got like 14 grand a month coming in payments, right? But we've only got 14 grand in the bank and $500,000 in note. You know what I mean? So you got this note portfolio that's not liquid, it's not solvent, and you've got all this recurring revenue, but you're broke.
Yeah.
Right. So we realized there has to be a harmony, a balance of like cash sales and note sales.
Yeah.
Right. For everything.
To be clear for anyone listening, you were not upside down. You created a hell of a lot of value in there. you just
we're not
rich.
upside down, but we were in a predicament, right?
Yeah.
Where I go, okay, I've spent everything I have and I now have that, I've bought that income stream, but I got to sit back and let it stack up to buy more. So that's where we learned there has to be like just a balance of cash sales and note sales versus all in on one, right?
Yeah. Yeah. So yeah, I mean, I've been looking at a bunch of land. So in most of those cases too, you kind of, you touched on it briefly, but you're just going to an engineer and the engineer is doing a survey and drawing those on overlay essentially on the property, right? You're not actually going out there putting fences in. You're not putting any of the infrastructure in. So it's like
most of the time, no. The one we're doing right now up in Montana, it's actually like considered a major subdivision. So we will do we will add some roads, right? We will do that because when we cross that like 5 children parcel mark, it becomes a major subdivision and it's going to take a little bit longer to approve. There's going to be those road costs, but 90+% of what we do, we're not doing any improvements.
Is that one inside the city limits or is that Just
On the
because,
fringe, it's on the fringe. It's actually up in Yellowstone County, which is people think like Bozeman or Yellowstone, the movie, right? But it's in Billings, Montana, is where it is,
okay,
and it's on the fringe. I mean, we're talking like minutes from city limits. So
yeah,
fortunately, we're on that fringe. So zoning's a non-issue. Like we could literally create 85 1-acre parcels if
mhm,
we wanted to build out all that infrastructure, right?
yeah,
We could about do anything we want because it's not in the city limits, right?
yeah,
But there would be that infrastructure, obviously cost associated with that. And then you could split up parcels all day long, but this is a good point. What you have to look ahead at is like, is there a buyer pool? Is there a
yeah,
market for what I'm trying to do? Right? Like, will the market absorb what I'm creating? So if I go and create 85 1-acre parcels, I don't know, right? You know what I mean? Like I
yeah,
need some data to tell me that that's going to get absorbed. But if I do some 20s, some 10s, some 5s, I have some
yeah,
variety, that there's a higher chance that there's buyers for each size. But most of what we do, Randall, is called like an administrative survey. So we send the surveyors out there. They go out there, they perform the survey, they record, they present us the map, right, that shows the footages, right, of each potential parcel, the boundary. They do the boundary survey. We record that with the county. Okay, the county then issues new parcel numbers for each child parcel. It might be the same parcel number as it was before, and then have an A, a B, a C, a D
mhm,
next to the other ones.
yeah,
But it's called an administrative like survey. So we just record that, and through recording that, we now have new legal descriptions and new parcels that we can sell. And I think that's the best way to like ease into subdividing, right? That's where you want to start, is with minor land divisions, no improvements, 4 or 5 or less with, administrative. There's all these exemptions in these places where like if your child parcel is over a certain size, then you just record it with the county and they'll give you a new parcel number,
yeah,
right? That's not going to happen in like, downtown Dallas, right? Or San Antonio, but
yeah,
like you get farther out, more rural in the county, you don't have to go through this process. There's not a town meeting. You're not like putting up a poster board of what it's going to look like. They just record your map from the surveyors, give you
yeah,
new parcel numbers, and you sell them.
yeah,
That's what you want to go after. And that's what we started with, right? And still it's one of our favorites. And
yeah,
it's not nationwide, but there's a lot of states allow minor land divisions, and you can get away with just that administrative recording without having town hall meetings and all of this,
yeah.
if you follow their exemption and ordinances and stuff.
Yeah. I mean, that's what I've been looking for, that sort of thing. And then just recording with the county commissioners or going through the county commissioners courts. But I think it's mostly over 10 acres in all the surrounding
Yeah,
counties
that's
here where I'm at,
exactly. Yeah,
but
that's
once you go
really
below it,
common.
it's still not overly challenging if you go below it.
Yeah.
We did a 7-acre deal where we cut it up into 1-acre tracts, and it wasn't hard. It just another little step in the process.
And for us, it took a 3-month process to a 6-month is all
Yeah.
it did in one of our markets, right?
Yeah.
There was some additional things we had to do and it added to the timeline, but it wasn't substantially more expensive or daunting or anything. It
Yeah.
just adds to the timeline.
All right. So one of the things that naysayer buying land may say is, all right, you're just buying a thing. There's no cash flow there. You've already talked about creating notes, which is a stream of cash flows. You and I were talking offline a minute ago about how you promote a strategy, I guess, of creating a second income. So why don't you talk about that a little bit, kind of explain that to us and how somebody trying to get into this might use it.
Yeah, well, I think usually people when you're in your current profession, right? We're either trying to scratch like an entrepreneurial itch because we want to do something, we want to build something, outside of whether it's profit driven or it's just to scratch that itch and know that we can, right? Like, hey, I'm a doctor, I'm great at what I do, right? But I have an interest in real estate, and I you know what I mean? I want to do that. And for others, it's more like, hey, I want to build, like I'm getting by, but I want to build some wealth, right, on the side, or I want to build a safety net, right, on the side. And that's what I try to help people with is through land flipping is build a 6-figure second income stream, right? And that can be like focused on cash flips only, right? or you can focus on payments. It's, really whatever you're more interested in, right? When we do payments, I say you're kind of buying time, right? Because I can teach people how to create a whole bunch of 5 to 15 year notes. And you literally bought yourself a decade where, if you wanted to step away and do nothing for 10, 15 years, you could, because you have that note income. Other people, it's like, hey, they want to generate, just lump sums or piles of cash. And then they go, okay, I'm going to take that and I want to put that. I don't want to be like a land flipper or own a land company. They go, but I need to generate cash like houses won't do for me, right? A lot of time houses are a fantastic play, like long term, net worth building, right? Generational wealth, cash flow eventually, right? But depending on interest rates, cash flow can get compressed. But fantastic, multifamily, single family, long term are incredible plays. But a lot of people don't have the capital to put into that. So like if you build a land flipping company where you're creating cash, you can either redeploy that, and if you absolutely fall in love with land, right, you can run a land company and scale that. But at the same time, you could take that cash, turn around and put it into single family or multifamily, something you can depreciate, has better tax benefits, and is like long-term wealth versus just being a flipper, right?
Yeah.
But either way, what I really like to teach people is that there's a different swag, a different demeanor, a different confidence you feel when you have, in addition to your job, you have a 6-figure income stream, right, on the side. You're going to walk into a work meeting different. Everything feels different, right? You're not as stressed. Nothing works you up near as much. I know, because I've been there, right? And as I transitioned into that, I would, at the workplace, people would be like, boy, you got such a high EQ, such a high emotional intelligence, nothing seems to rattle you. And I would laugh internally because inside I'm thinking, no, I've just built this, like, I just built this machine on the side. And if things go sideways here, this does not concern me at all. You know what I mean?
Yeah.
So you could kind of just operate from a different place of calmness. And so I really like having that safety net. Things can happen with the economy. You can lose your job and you weren't planning on it, or maybe you're just unhappy and you want to step away from it, but you're married and got kids and you don't want it to be like this really like worrisome situation where you go leave, you try to be an entrepreneur, it doesn't work, and you got to return to the workforce a year or two later, and it creates a lot of stress on your marriage, your home life, right? I would never want people to do that. So I'm a big fan of teaching people like overlap, like let's build this income stream on the side, and now we've got options. Okay, those options could be leave your job and grow that single income stream, or just enjoy. I've got a lot of clients that work remote jobs, 6-figure jobs for their W-2, and then they build a land company on the side, and they're happy to stay at both, right? Because they can kind of take care of all the bills with the W-2 income and use all the other money to invest. So I'm just a huge fan of not being dependent on one employer, one income stream. And that sounds like, real in alignment with what you're doing with, agents building cash flow, obviously.
Yeah. Yeah, for sure. It is something that I look back on my investing and buying and flipping. When I first got into it, it was all flips. I mean, I would buy rental properties here and there, but the deals that I still have, the notes that I created early on in my career, I still have guys paying me payments on them. And I just think back and I'm like, man, if I just stacked 50 of those every single year, and those are single family houses, arguably more difficult to manage. And you're doing consumer loans at that point rather than, land loans. It seems, are land loans, let me clarify. Are land loans consumer considered regulated by SAFE Act? Not.
No, the nice thing is it's not owner occupied. There's not a tenant, right? So and quite often it's not always, the buyer's not even in the same state, right? So we close through title, and we still use, if title doesn't service the note, we still use a third-party note servicer to originate the note, so we know that all the paperwork's done right and legal. And then also so that our borrower has a dashboard login, we have a dashboard login, and they can chase them down if there's, late payments or they stop paying and it's not us. So we still recommend and use the third-party note servicer on that. But no, it's not like there's like there's not like
Evict.
this foreclosure and we need to evict them from the
Yeah.
house, from the vacant piece of land, right?
Yeah.
Like generally we're not allowing them to make substantial improvements, right? Or live on the property till it's paid off.
Yeah. Yeah. That's
And
interesting.
that removes a lot of the complexity, right there.
Yeah. So I'd be curious how you do it on the back end. Look, we're getting to the top of the hour, but I want to ask still about some of the systems that you have in place.
Yeah.
That one is a servicer, title company, that sort of thing. But how are you managing the process from maybe start to close, or just maybe one or two tips? And then obviously, I haven't mentioned this. Travis has a book. You hold your book up.
The Land Investor's Playbook. Yeah.
That's right. So maybe high level, a few of the specific tools that you use that help you really run your business.
Yeah, absolutely. So early on, we realized like either we could leverage software and tools and automation, or we could like just have to continue to add team and headcount, right? And there's great, a lot of people focus on building team and growing the company, and they point to like the org chart and how many employees they have is like a metric for success. Like I might feel that way in my 20s. At this age, like I understand like revenue per head count is what matters, right? Like I don't buy into vanity metrics. I also understand there's opportunity costs, and like the more employees you have to manage, right? The more headache, that is. So if you can stay lean, grow, but stay lean, right? It's kind of same concept of like adding lean muscle versus adding a whole bunch of weight, right? In bulk. So we try to operate really lean, and I call it like a micro team. So like 7 people or less, and none of our businesses have more than 7 people. Some of them only have 4 or 5. Okay, so kind of a micro team, and it's kind of like a SEAL Team 6 situation where there's no dead weight, there's no extras. Like everybody, you know what I mean? Everybody has to be really good at what they do and be compensated, well above what the norm is so that we don't need extras, right? So we kind of get away with things by having like a virtual team, remote virtual team, and then leveraging softwares and automations. And that was something that, years into it, there's just not a lot of software specific to land, right? There's a whole bunch of, house investors and gurus that, have their CRMs and things like that, but they're not built for land, for our workflow, right? And what we do. So I kind of had to, my wife and I had to Frankenstein via Zapier and webhooks and all, we had to Frankenstein all these softwares together. You're dialed in, you got a great system. I got all sorts of texts and emails alerting me that I was coming on the show. So you know what I'm talking about here, right?
Yeah.
But a lot of people don't when they're investors. It's just like they're on the phone, they're working the phone, right? But you realize as you increase your marketing and you have this bottleneck of all these leads coming in, you have to figure out systems and processes. So the very first thing we did was we started building, just simple checklists of like, what is our process so that we can create consistency. That allowed us to hire. Okay, we can now outsource and delegate, to a team member. Like most of our teams in the Philippines, right? But we can now hand them like a standard operating procedure, which is fancy word for a Google Doc and a Loom video, right? On how to do this and create a consistent result. So after we documented our processes, we could then delegate and hand these things out. And then we go, okay, we've delegated, we've systemized things. Now let's optimize. And that's where we go, okay, let's bring in software and figure out how, if this is a subdivide lead, how do we tag it as a subdivide lead? If this is, a waterfront property, how do we tag it there? If this person says, not right now, but reach back out in 6 months, how do I do that? So through software, right? We have to have, softwares to pull data. Then we have to have softwares to market, to send letters, to text, to do this outbound marketing. And then when things come in internally, we have a CRM. And that's something probably a little early now, but yeah, we started a CRM this last year, a specific CRM. That's a new business, a new company, and it's built on our workflow.
Got it.
Because we built up through about 5 years into this journey, which was about 5-6 years ago. We decided, I kind of got to the point where I had I read that 4 Hour Workweek book and I really tried to build the company off that. And
Steve Ferris, let's go, baby.
I naively bought into the fact that you could do that. And
Yeah.
honestly though, Randall, I got it to a point where we were working 12 to 14 hours a week and
Yeah.
the rest of the business was totally automated. So after I left my job, there's like the first year was like working 12 hours a week.
Yeah.
And I was just answering all these questions on the forums, like just for fun, or helping people because I had all this time. And that led to like people like, hey, can I just jump on the phone? And so I started just helping people out with marketing campaigns. And then I'd help them get deals. And then people would come back to me and go, hey, do you want to, like, I got this great contract. Thanks for helping me. But like, I don't have the capital. Do you want a JV? Right.
Nice. Yeah.
And we, at the time, there was no agenda or intent. Like, you know, we were tearing through our acquisitions budget ourselves.
Mm-hmm.
But then all these JV opportunities came up. And that's kind of when I started getting into coaching and consulting and training.
Yeah.
Right. And fast forward 5 years, we've got a pretty large community and, you know, we needed to build the tool for ourselves. So we decided just to build out a tool that for land, and it's a CRM for land investors with a website.
What is it? What's the name of it?
Lead Boss CRM. Yeah, is what it
Lead
is. Actually,
Boss.
we'll be launching the agents version next year after we iron out all the wrinkles with the land investors, right?
Yeah,
We'll be
nice.
launching it.
Nice.
But yeah, so software is a big part of it. The tools, organized, just being organized. When you start out as a person of one, it's just having a checklist and being consistent with your follow-up. You know, with agents, right? There's a big variety in what happens when an agent's phone rings. You know, they ignore it, respond to it. How quick do they get back? Right? That's kind of the fork in the road for investors or agents. Like, what happens after your phone rings? You know, and how consistent are you? So that's really through our systems, processes, and software, we can kind of build in consistency, which leads to consistent acquisitions, consistent deal flow, and more consistent, predictable revenue, which is what everybody likes, right?
Yeah, for sure. Awesome. All right. So you got the CRM then coming. I mean, look, you're obviously steeped in the land world. It's been awesome for me talking to you about this because I've done some land deals. I haven't gotten big into it, but I love acquisition, subdivide, owner finance. Because I come from the owner finance world and I've been creating notes for a long time. Would you, before we go, because again, I want to know this, do you have a servicing company that is really good at land notes?
They're regional. You'll find that it's not like housing where it's national. I feel that question so many times, but generally they're very regional. Sometimes they only cover that state you're in. Like in the Southwest, West Star is one that we use, like in Arizona, and you know, they'll cover 3 states. There's a company called Del Toro that will cover more states, you know, but it's very regional. I default first to the title company because a lot of times the title company will service the note. They might not have as good of like a login or dashboard as these actual, you know, borrowers, right, or note servicers, but a lot of the time, you know, they'll service the note.
Have you experienced that in Texas? Where the title company will service, or do you not buy in Texas?
In Arizona, yeah. So almost all of our seller financing I do in Arizona, right? In Montana. And the other states, the states I would call like really hot markets like Texas, Florida, Carolinas, it's like cash. There's, you know what I mean? There's such a massive buyer pool that it just goes cash that we don't have to do seller financing.
Good to know. All right, man. Look, again, ton of information. Look, if you're interested in, I've got all your links here. We've got a website, Facebook, Instagram, YouTube, all kinds of stuff. Ton of content that you're putting out. I love your content. I'm putting it all in the show notes. So if you want to talk to Travis, click through directly to him. His contact info is in the show notes. You mentioned something about a book. What's the story there?
Yeah. So I would say, so the book, this is something that took me, you know, it's, you know, we get overly ambitious, right? And we, with no idea, you know, knowing how much work there's going to be. So anytime you step into something that's outside your wheelhouse, right? Like I'm very good at acquisitions and flipping land, no idea how to write and publish a book, right? But we decided to go the traditional route. And after years of kind of running our own business, I talked to you like about how land would come back and we'd have these incredible deals that were just exceptions and byproducts of countywide campaigns. Oversized acreage that we could subdivide, waterfront lots that came back as these countywide campaigns. And sometimes another one is the portfolios where like the owner, we would mail them and then they go, well, I actually own like 5 other lots in the subdivision. So I then learned how to pull data where I could target only people that own more than 2, right?
Yep.
And we bought one that was a 20 parcel portfolio. So one, economies of scale here, right? Like one seller, one escrow, one closing, 20 properties.
Yep.
So some of those things I started to look at them instead of going, hey, these were just got lucky events. Like I go, how do I like get intentional about this and replicate this success? And that's the playbook over the years I built. Was it just started with a yellow notepad of going, okay, let's set a minimum acreage of this size. And then once we pull that list, let's look it up on the map and only target the ones with enough road access to subdivide. And then the next one was, hey, let's build these lists of only waterfront lots, so that our whole list, everybody on our list has huge, like asymmetric outsized return potential profits, right, on these waterfront lots and low days on market. And then the portfolios where we go, let's build these lists of people that own 2 or more, 5 or more, 10 or more, and only go after them. So these are kind of like, they started out as just plays in the playbook on a notepad. I threw them in a Google Doc. And then when I was coaching people, that was just like, I would share that with them. And then it became kind of like this frequently asked question. And I'm like, I had a couple people go, oh, you should just put it in a book. And I'm like, oh yeah, I should just put it in a book, right? Whatever. And it's like, one, it's land. Like there's not near as many people interested in land as houses and multifamily. It's kind of this overlooked, smaller, lesser known niche. So one, I'm like, who would read it? Who would want a book on land, right? So that was the first thing. But then I'm like, you know what? Actually, that doesn't sound so comical, the idea of it. And then eventually, I put it together. We worked with the publisher and we got it after about 2.5 years. We finally got it launched. So it's on Amazon. It's called The Land Investor's Playbook. If you go to travisking.com, you can get it for free. I'll give everybody a free copy if you go to our site, travisking.com, or you can shell out a whopping 99 cents at Amazon if you want to go that route.
Support Travis. You can buy it on Amazon. Yeah.
I'll tell you this, appreciate this, Randal. Our kids, when we published the book and we got the first hardcover, my son says to me, I got three boys and a fourth coming here in a couple of weeks. And, and one of my boys says, well, how much are you selling the book for, Dad? And I said, well, right now we've got it, it's 99 cents. And he said, you're a terrible businessman. He said, yeah, 99 cents. How much did it cost you to make this? And he's just laughing at me, right? So the kids got a good kick out of it anyway.
Yeah, so
nice. It makes for a good paperweight, but I think it's helped a lot of people.
It's the main profit center right now. It sounds like that's all you're banking on the book. No, I love it. Like I was telling you, man, kudos on getting it out there. I know that's not an easy task to do. So again, if you want to catch up with Travis, you can follow him on a number of the links we'll put in the show notes or just reach out direct to them. It's been great having you on the show. Really appreciate you jumping on and sharing your experience and knowledge. So yeah, we'll catch up soon, I'm sure, because I got some land deals that I want to do.
Thanks, Randal. I appreciate it. Yeah, and I would just tell agents to land listings is such an overlooked thing. Adding that, understanding that, I'm not going to say you're going to 2x, right, your commission, but you could at least add 20% there, right? So if you kind of become aware and familiar with land plus houses, there's agents that have incredible years when they add in those additional listings, right?
For sure.
All right, thanks.
Hey man, good catching up. Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.